This panel, as you've seen, is called Hunting for Growth. And I don't need to tell all of you that these are uncertain and to a large degree unpredictable times. The markets, it's fair to say, have been struggling to see beyond policy shifts and through the resulting fog of confusion. And that's why we asked Stephen and Jenny and Marcelo to join me here on stage to help paint a picture that makes sense for people who are willing to take risk in search of growth. Now, before I turn to my panelists, I do want to remind all of you that we'd be delighted to hear from you. A little bit of input in terms of questions from the audience would be most welcome, and they'll come to me and I'll do my best to weave them into the conversation that I'm about to have with these three people here. So don't forget. I think it would be helpful, as I said, to establish a little bit of context, so I want to do the whole elevator pitch thing. I'm going to ask each of our three panelists to tell us in one or two quick sentences who they are and what they specialize in as an investor. Stephen, would you like to begin?
Well, first of all, it's great to be back in Doha, and thank you for hosting us here for this session. At Liberty Strategic Capital, we're mostly focused on technology and financial investing, particularly banks and insurance companies, and in technology across everything from data centers to cyber.
Jenny.
Great. Hi, everyone. I'm Jenny. It's great to be here. You know, as we were coming on stage, I realized that if you want to be an investor, you should be wearing running shoes. Because part of being an investor is you got to just run faster than most people. You want to get ahead of the trend. So Granite Asia, we are a global investor, early venture and early growth. And so what we do is we look for the best entrepreneurs, help to grow them as they grow from 0 to 1 to IPOs and to public. That's what we do on a global basis.
Marcelo.
I'm Marcelo Claure. I have a few different businesses, but where my energy sits today is having the ability to buy companies, apply AI, turbocharge them, and generate a lot of returns for our family office and my investors.
Terrific. And I would just point out, in addition to what Jenny said, that yes, if you want to be an investor, you need to wear running shoes, and if you want to be a moderator...
Precious.
What I'm most interested in, and I suspect what you're most interested, again, is growth opportunities. I want to know from our panelists, what is the single best investment opportunity in the world right now, regardless of industry, regardless of region, that you see, why, and how you're making it available to your clients? Marcelo?
I would say that today, everybody talks about AI, right?
They do.
We have to learn how to divide AI.
Ad nauseum, I might add.
And I'll say that most of the money, about $350 billion a year, go what I call the factory of AI. And that is, people are investing in power, investing in data centers, investing in semiconductors, LLM and applications. And it's incredible. Think about it, $350 billion a year. What I'm focused on and what I do believe single-handedly will be the most value creation is in enterprises that have the ability to grab the technology and be able to implement it, what I like to say, apply AI. And we have a really good use case. I'm very lucky to be the largest independent shareholder of T-Mobile in the US, and we made it publicly that through a digital and AI transformation, we're going to generate close to $10 billion of profit. So put things in perspective, it has taken us about 120 years to get $30 billion of profit, and it's going to take us 3 years to add another 10. And what you can do in use cases, in customer service, in sales and marketing, in software development, in the back office, in supply chain management, and so on. And the reason why I say it's the best investment is because what we do is we buy good companies and we make them great. So even if we don't do such a good job, we will always have a great company. So I've moved from being a venture investor, a growth equity investor, to now I see the single-handedly as the most important investment will be in buying incumbents who have an edge and be able to apply AI and make them great.
A couple of follow-up questions. What's a good example of an incumbent? How could you take a company that we might, or an industry that we might know and understand, and turn it into something that's so much better than what it is today that you can create the kinds of returns that you're talking about?
I'll give you an example. A company in the US called K-Health. Today, we're the primary care physician of the world's leading hospitals, Mayo Clinic, Mass General. And the way it works is our AI will ask you the right questions about your symptoms, be able to combine it with your electronic medical records, combine it with our clinical AI, and in less than 5 minutes, we have the ability to diagnose a patient, prescribe, and develop a cure. And what we do is we grab that information and we pass it on to the doctor, because the doctor, at this point in time, will have the final decision. So what does that do? It drastically reduces the cost to provide service by 90%, and it also provides a much better quality than when a doctor was doing it on his own. So the results are radical. I mean, think about it, 90% reduction while enhancing, that's the power of AI, while enhancing the quality of care that we do. If I go back to T-Mobile, you know, the quality of service at a telco that you're able to provide customer service, when you have something called proactive customer service, what does that mean? AI, on a just-in-time basis, is able to predict if there's going to be an issue with the customer and fix it before it happens. Very different than you calling a customer care and complaining about my bill or complaining about I drop a call and all that. So these are real use cases that we as investors are so lucky that somebody else is investing in the factory of AI.
The second follow-up, why is a telco, why is T-Mobile, a wireless services provider, the right platform from which to operate?
Well, I'm very lucky to be, like I said, the largest independent shareholder. And when you have a company that has 130 million customers, a huge proprietary data set, then you're able to innovate. And we have deep partnerships with OpenAI, we have deep partnership with NVIDIA, and we've done some pretty incredible things. I do believe that the T-Mobile AI transformation, it is basically the largest transformation of its kind. There's no other company in the world that can say, we are going to generate an excess of $10 billion through a digital and AI transformation.
You're right, it's a bold claim.
And again, it's public. Go to our investor relations, see it. I mean, the management team committed to that number. So what happens when we do that? So some magical things happen. You start trading at 11.6 times, while every other telco trades at 6 times. You start generating profit at an accelerated pace that others don't do. So T-Mobile, healthcare, we can go on. And I think for the next 5 years, what we're going to see finally is the technology is there. It's amazing, right? And the winners are going to be the ones that have the ability to apply AI to existing legacy businesses.
Jenny, same question to you. Single best investment opportunity you see in the world, regardless of industry or geography. Why? And again, how are you making it available to your clients?
Yeah, so Erik, I'm going to answer your question separately. I think we saw for early stage venture and growth venture. So it's very hard for us to pick one company.
And you have to spread your bets, right?
Yeah, exactly. So for us, it's not about spreading the bet. It's really about looking at the ecosystem. And so when you are solving for early stage and early growth, what's very important for us, I think the key criteria, and this criteria has changed, is number one, talent, and where the talent is. Having played globally and invested globally for the last 25 years, today for sure, I think Asia is the place to be. So if you look at Asia broadly and the level of STEM talent from China to India, here, Middle East to Southeast Asia, we're talking about 6 to 7 million of STEM talent being groomed here on an annual basis, right? So that's a lot of, and I know we're talking about AI replacing talent. At the end of the day, businesses are still built initially by humans. And so I think the level of talent is very important. So this talent is here, this talent is hungry. And I want to add that with the world order being restructured, there's also an inflow of new talent coming back home, right? Whether it's back to the Middle East, whether it's back to Southeast Asia, whether it's back to China or to India. I think that's happening as well. With hyperscalers cutting off headcount in the US, there's also a lot of skilled talent, the likes of those who have experience from, Microsoft to Apple actually coming back. So I think number one, talent. We're seeing enormous talent flow back to this region, which gets us excited. And this is across the board, number one. Number two, markets are being reconstructed, right? In the past, US, China, homogeneous market, huge market, growth markets, that's where a lot of the innovation is happening. But today, the markets, whether it's building bridges from the Middle East to Southeast Asia, China to the Middle East, those bridges are being reconstructed in a very cohesive, friendly manner as well. And so I think we are starting to see the appearance of huge emerging growth markets other than the huge markets that we know. And I think that's a very important part. The third, where's the capital? Now, while a lot of capital has been flowing back to the US, whether you're overweight US or trying to diversify, I think for sure, US is going to be benefiting from a lot of the capital flow. But it's also true that countries are realizing that we have to keep the talents here, the ideas are here, the capital needs to be in line here as well. And therefore, the developmental effort by a lot of countries here in this part of the world is very important. So those are key criteria. Now, when you put that all together, I want to say that the trends, and I'll just highlight two trends, not one company. The first trend is this, is that we see from a venture land that innovation is going back to foundation and fundamental technology. Now, why do I see this, right? We talk a lot about semiconductor. Now all of a sudden, all countries realize that we better have some semiconductor capabilities. And what's happening, right? So when I say back to fundamentals, the 28 nanometer process node for foundry is back in vogue. You don't have to be 3 nano if you have nothing. You start with 28 nano. And so if you just track where are the 28 nanometer foundries being built, today you have TSMC in Japan, you have India with the Tata Group coming out with their, taping out very soon with their 28 nano, Malaysia announcing, Singapore announcing strategies, and I'm sure here in the GCC as well announcing. And what that does is it allows basic fundamental technology that we thought we don't need. That's coming back in vogue. And I think that will crystallize the talent in fundamental technology. And so along that stretch, and this is actually clearly the foundation of AI, as we talked about, right? You have basic access to basic chipset. We may not need the 10 to 23 compute power, but basic technology that people are starting to learn. And on top of it is data, right? We have proprietary data here. Every single country has your own specific small language model. We don't need large language model. The LLMs are open source. You can access, compute at a very affordable cost today. So then it's about how do I then build the infra, build the technology, have the data, have the right rules, and then allow the ecosystem here. You have the talent, we have the talent. So I think that the one theme is around AI, we are actually going back to fundamental building block of the technology stack. So the entire technology stack, in our view, is being reconstructed. May not sound sexy, we're not going for the moon, but right now I think it's really going from 0 to 1 to 2. And in that AI construct, one particular area that we as a firm is very focused on is the whole concept of agentic AI plus robotics. And I think that this is also one area that Asia as a whole has the right to win, right? First, we have manufacturing capability here that allows us, whether you're building humanoid robots or machine-looking robots, at a very good, scale-efficient, affordable ecosystem pricing as well. That's number one. Number two, many of the countries here don't have the luxury of being able to put people back into factories. And therefore, whether it's here in Qatar, right, 300,000 in terms of population, my home country, Singapore, 5 million, we don't have the human power to be able to compete to do everything. But agentic AI plus robotics allows us to build this automation capability that can allow us to 10x our labor capability in a way. And so being able to now, imbue our robotics with the right, generative AI or agentic type solution, I think it's actually one way for this region to actually leapfrog. And the second thing is this. The application scenario is here, right? If you just look at transportation, logistics, air, sea, and land connectivity, this is a diverse region, different countries, different ways of modes of transportation. And if you can combine this together, connecting the regions with the right, not just human, but robotics combination, I think this is where the next new amazing companies will be built.
Stephen, over to you with the same question. Single best, where, why, and how are you making it available?
Well, a lot of comments on AI, and I think there's no question AI is going to impact everything we do. And I agree, the opportunity to take great companies and use AI is going to transform. Also the issue of jobs, what do we do with jobs? Because there's no question, you look at things that are customer service oriented, and the AI is so much more efficient. As we look at across all these different opportunities, what we really like is data centers in the U.S. And the one thing that we know is that AI is just going to create this enormous demand for data and this even growing opportunity for cloud computing. So for us, owning data centers for 20, 30, 50 years, we're going to have a limitation on power in the U.S. There's no question over the next 20 years, the technology will change for chips. It'll become more competitive. NVIDIA may not be the only major provider. So I think you're going to have a big technology refresh over the next 20 years. But the one thing we know is you're going to need data centers, you're going to need power, you're going to need cooling to support all this growth in the cloud. So we look at them as long-term bonds.
Interesting. There's no question, everyone, that that some of the shifts that we've seen over the past 4 months in U.S. policy, and let's not forget it's been only 4 months since the inauguration, have changed conditions in markets around the world and changed conditions for industry and thus created new opportunities while perhaps, I won't say destroying, but weakening perhaps the opportunities that people may have seen previously. Jenny and Marcelo, you both have respective backgrounds in Asia. We've heard a fair bit about Asia from you, Jenny, already, but Marcelo, Latin America. Can you tell us how those shifts, from your point of view, have changed conditions in those respective markets? Why don't we start with you, Marcelo?
So another thing that I do is probably one of the largest investors into Latin America. That's where I'm from. I'm from Bolivia, so I'm passionate about what Latin America can do. And I think that all these new changes in the geopolitical landscape is that Latin America should benefit enormously. Mexico sits right next to the United States, and a lot of the manufacturing companies that used to solely manufacture in China are moving at the fastest speed possible to serve the US market from Mexico. What has happened? For the first time in over 50 years, Mexico becomes the largest trading partner to the United States. China is no longer that trading partner. Number two, the world is growing towards the global south. Most of the food that the world will consume, the additional food, is going to come from Brazil. Brazil becomes the feeder to the world. If we believe the world is going to electrify, which I do, most of the critical minerals come from Latin America. Lithium alone, 60% of the world's lithium sits within 3 countries. My home country, Bolivia, which is about 30% of the world's lithium, Argentina, and Chile. Same with copper, same with nickel, etc. So I look at Latin America's opportunities. Feeder to the world as it relates to food, number 1 provider of critical minerals in order for the world to electrify, and the largest trading partner, all supply chain moved. The alternate supply chain to China is now Mexico. So now Latin America comes with its complications. So I think the potential, I don't think even if Latin American politicians try to screw this up, they're going to be capable because the forces are greater than them.
Jenny, quickly from you, the good and the bad as a result of these big shifts in U.S. policy that we've seen these past few months.
Yeah, I mean, the first 20 years with globalization, it was about finding that one leader, that the ultimate, category leader that can take on the world, and that's where you get premium, right? You get, and large companies has economy of scale, and therefore they are able to then dominate the world. I think with the new world reorder, it means that there will be regional clusters of excellence. It will be regional clusters of great companies. And so it's okay to be number 2, because you could be number 2 in every single region and still command that premium. Because today we talk about AI, we talk about data, we talk about processes that's going to be very specific to industries, specific to countries, specific to regional challenges that needs to be built and addressed. And therefore, the good of it is that now it's not just going for that one company and overpaying for that company until the returns go to 0. It's actually about finding regional champions, which could also be huge category leaders for us as funds as well. And I think it's actually good for the world to have multiple pots of excellence that can be localized to its own needs.
Stephen, you're in the unique position on this stage and at this conference of having been the U.S. Treasury Secretary. I think it would help us all to understand from your point of view what are global markets misinterpreting or misunderstanding about the intentions and the approach of this second Trump administration.
Well, let me just say, I think there's a lot of similarities between President Trump's economic plan now and what we did in the first administration. And really the 3 components of that: tax cuts, regulatory relief, and trade. Obviously, there's a lot of activity on the tax bill, the one big beautiful bill going through Congress, which, I think will pass quickly.
Do you?
I do. I think, I think there's some issues that still need to be resolved, but I think that we're on track to see that happen early summer. The second part is regulatory, where we've just seen huge transformations. I mean, if you look at, what's going on in the banking business and all of a sudden opening credit up and other opportunities, I think you're really seeing a transformation in regulation. Now, the big difference is trade. President Trump has always been focused on trade. This is something he's been focused on for 20 years, not just the last 2 terms. And he's determined to create a level playing field of trade. I was very involved in the situation with China. I think there's no question that our markets were open to them. Their markets were not open to us. And if we can open up the China markets to U.S. businesses, there's a huge opportunity. And tariffs play an important part of getting people to the table and negotiate. Now, I'd say the only difference is the president wants to use tariffs to create revenue, and I think he's been pretty clear on that. I've talked about the idea of taking a 10% tariff across the board, scoring that, using that as part of the reconciliation process. That's not going in, but I think the markets have kind of bounced back and kind of have assumed that the president's just deferring all these things and not making big changes. I think we're going to see big changes, and there clearly will be winners and losers along the way as a result of that.
Since you brought it up, I'll ask you a follow-up question on the tax bill. There are 2 groups that need to back down if this big, beautiful bill is going to get passed. On the one hand, it's the SALT camp. It's the congressmen from New York and New Jersey and California who want to see that cap raised. And on the other hand, it's the more conservative representatives who want to see greater spending cuts. For your prediction to hold, for this to pass in the early summer, who's going to back down?
I think it's going to be compromise on both sides. So, you've seen in the press the discussions of the SALT cap going from 10,000 to 30,000. That's both expensive and a pretty meaningful change to people. My guess is it'll end somewhere around that. And, in regards to the spending issues, I'm very concerned about the budget deficit. I think that the budget deficit is a larger concern to me than the trade deficit. So I'm on the side of I hope we do get more spending cuts. Something that's very important. You've seen the Treasury market back up. I think less as a result of this rating change, which I would still rather buy U.S. government securities than any other AAA out there. I still think we're a AAA credit, no matter what the rating agencies say. But I do think you've seen a backup in rates because the Fed is on hold for the moment, and we have big budget deficits to finance.